Again, please, why not? The Dow is now up 800 points. There are some stocks which are just going really well. United Health, Walmart, American Express, Goldman, the Dow stocks, all of them on the upside. The Nasdaq, though, down 100. Dale Smothers with me now. All right, Dale, you believe that the S&P can hit 8,000 by the end of this year. What has to happen for the S&P to go up so much from here? End the war, perhaps?
Well, Stuart, ending the war would clearly make it easier to get to 8,000, but I don't think it's absolutely necessary. There are four things that I think must happen in this market for us to get to 8,000, and it's not going to be a straight line up. You're going to see some volatility here. AI spending must continue. It continues to lead earnings higher, and those earnings clearly are what we are experiencing here as the market continues to climb higher. That's the first thing. AI spending must continue. We must see oil below $100 a barrel, Stu. As oil creeps above $100 a barrel, it clearly creeps into the company earnings, and that will not be good for anybody. When we think about broadening out, that would be the third thing I would say is absolutely necessary. If we don't see some broadening out into software, into industrials, into energy, I think it's going to see a little bit of a short-lived rally here and unfortunately may not get to 8,000. The idea that broadening out helps the market is clear. I think I'd like to see some broadening out in the small cap and the mid cap as well. And that fourth thing is investors must stay calm. Stuart, we've been talking a lot about this. The summer months tend to bring volatility. We've got midterms. This calm approach to investing, knowing that markets are in a good place, is a must for the S&P 500 at 8,000.
Okay, you're settling me down. I like that. You're warning investors about some of these upcoming gigantic IPOs. You say, don't confuse a great company with a great investment. Are you telling investors to just stay away from SpaceX?
I wouldn't say stay away forever, but I would tell you that the SpaceX, the Anthropics, the OpenAIs of the world, they've been private for so long, Stuart, that a lot of that short-term money that can be made has likely already been made. And so the idea that Wall Street sells this dream when energy is in the air, when excitement is in the air, Wall Street tends to sell the dream at the highest possible price. Be careful that you understand the fundamentals of these companies and that you are in them for more of a long-term stay if you're buying them at IPOs. My expectation is that the IPO sees a bump. We see a big run-up in the price, and then perhaps something that would resemble what may look like a rug pull to the average retail investor. If you're getting into this for a moonshot, hoping you make some extra money real quick and easy, be careful there because these companies are likely to change the world, no doubt. But they're losing money right now, and on the fundamentals, that is not a good thing when you look at stock investing for long term.
Okay, we consider ourselves warned, and we'll take care. Thanks very much, Dale. Always good to see you, and we'll see you again real soon.
Always.